just started this $200 million fund to reinvent critical infrastructure. It doesn't seem like a huge amount of money when you look at, BlackRock with $100 billion, right?
Totally.
So how do you do it with, what's the plan with that budget?
Yeah, of course. So just to kind of set the stage, so CIV, as an investment firm, mostly backs, but every so often will sometimes build companies on platform. And predominantly, we're investing in early stage ventures. So everything from the earliest stages of we have a thesis and an amazing outlier co-founder, and we'll build that company together, or we'll find an amazing company outside that we can then invest in and help bring operational capabilities to help that company go faster. But where we invest, we're investing usually between $5 and $20 million in the early stages of a company. And then those companies, as they get to commercial success, that's traditionally when we then go work with a BlackRock or a GIP or any of the major infrastructure partners to now scale the actual infrastructure.
So it's kind of like you're developing new technology that then bubbles up, and that becomes, that's how we change things, essentially.
Oh, yeah, I mean, listen, I think that we invest in a very specific way. So we predominantly look for what we call scale tech. Deep tech is fantastic, but we tend to find it's too capital intensive and too long duration for a 10-year fund cycle. And so the first thing we're always looking for is technologies that we can scale today. The second thing is we really love to find technologies in demand-driven markets. This is where the large conglomerates actually need and want what we have. And then the last is, of course, proven unit economics, where these things can actually scale on a completely dispassionate basis, just based on purely their economic merit.
So we were talking earlier about how you think AI is going to change the physical economy. And so what do you view that labor, what is that going to look like in the near term or like in the 10-year horizon? What's your vision there?
Yeah, vision for labor. I mean, listen, I do think we're in a moment right now where there's a couple key megatrends that are completely reshaping the physical world, right? We have AI and compute and just the voracious power needs associated with the transition to an AI-driven economy. The second being, we've now deglobalized. It started with COVID, and then it got accelerated with Ukraine, and now, of course, we're finding ourselves in a world where tariffs are forcing everyone to rethink their supply chains. And then, of course, lastly, we're electrifying everything. And the combination of those three trends are driving a massive transition in the global economy. In terms of labor, I mean, I think we've seen these transitions historically across many cycles, and we always tend to find a world in which that labor gets reallocated across the economy. And so I think we're going to look out 10 years from now. We're going to see a world increasingly powered by AI. It's going to reshape the way productivity is defined in the global economy. We're going to see the world increasingly built by robots. And we're going to find a restructuring of the way that labor is allocated within this new world.
And so what do you think actually needs to happen? Because obviously a robot worker consumes a lot more energy than a human worker today, right? Yeah. So, I mean, what do you think needs to happen to sort of make that vision reality?
Yeah. Well, for the 20 years prior to 2020, we were in a low demand, low volatility environment for energy, right? And then given the mega trends we were just talking about, now we see ourselves in a world where we have inflecting demand for energy and yet relatively fixed supply. And so everything in the middle of that dislocation is getting significantly more valuable. Companies that can solve for creating greater efficiency is literally just driving pure profitability within those industries. And so you're either creating greater abundance of resources, greater efficiency within the use of resources, or greater resilience within resource ecosystems. In our view, fundamentally, that's where value is going to be created across industries.
Yeah. Well, and so you're reshaping things, and you've also been involved in clean energy in the past. We have an administration now that wants to power AI data centers with coal. So do you feel like you're sort of working against the tide here?
I mean, I think that, I think we're in a post-ideological world because the reality is right now the rev limiter to AI isn't chips, it's power, right? I mean, you can just look at the example of, when Microsoft announced their earnings in Q4, they lost 6% of their market cap, or $180 billion in a single day. Not because they, because they missed their forecast on data centers, not because they couldn't get the chips, but it's because they can't get their power. And so right now we're just in an absolute arms race for electrons because everyone realizes that those electrons are the input to all of their future prosperity. across the hyperscalers, but also the industrial players. And so it's going to be everything from what I can tell. We're going to need to, one of the first companies that we built on platform was a nuclear company. And so, we've talked about nuclear forever, but, we always viewed, hey, this is probably the greatest thing that we've ever invented as a civilization, yet we haven't been able to deploy it here in this country for the last 30 years. But it was obvious to us that it was now going to be imminent, given that the demand was driving the need for new 24/7 firm power.
So do you think just to follow up on that point, before we move on to nuclear,
of course.
I think it's an interesting one, but do you think that it doesn't matter what the administration does or says, that this is sort of the ship has sailed and we're going to move into these new technologies and, greener technologies regardless, because the private market's going to...
I mean, I think at the end of the day, what's going to scale is what always scales, which is better, cheaper, faster. And so provided that these technologies are now driving better, cheaper, faster within industry, I think you're going to see those things scale. And to the extent that they don't, they're unlikely to scale. But that's always been the way the economy has worked, from what I can tell. And so I do find that we're now in a world where we're post-ideology. For a long time, we were talking about the existential threat of climate and the need to now deploy cleaner, less carbon-intensive technologies. But now we're in a world where, given the demand is driving the need for an abundant source of energy, we can now find ourselves in a world where these things are now commercially viable and can scale on their own economic merit. And if they can't, then they shouldn't exist, and that's totally fine to me. It's like, at the end of the day, if there's no actual market for it, we shouldn't be investing capital into those industries unless government can, philanthropy can, but industry certainly isn't going to.
Okay, so let's talk about nuclear then, because that's one of your big things. I mean, I think nuclear has some big problems. So there's the not in my backyard problem, right? Mm-hmm. There's the problem of it's essentially, it takes forever, right, to build these things. It was like 10, 15 more years, mm-hmm. and it's also generally not profitable. Mm-hmm. Hasn't really been that profitable in the past. Mm-hmm. So how do you get over those hurdles?
Yeah, so I mean, I think that just to kind of set the stage. When we looked at this, we said, hey, we are now in an inflecting demand environment, relatively fixed supply, and our view is there was no way to cross that chasm except the one thing that we had already solved 70 years ago, which was, fission nuclear power. When we looked even deeper into that, we're like, well, actually, it looks, we've been very successful in deploying reactors. Today, we are currently, what won't be for long, the world's leading superpower in nuclear energy production. China, as many of us may know, has 400 reactors in their pipeline. In the next 10 years, they will surpass the U.S. as the leader in nuclear power generation. But when we really looked at the problem, we're like, hey, it's interesting that we kept on wanting to put more capital into creating a new reactor. If we already have 94 today, that suggests to us that we actually have fantastic reactors. We have great technology. We just haven't been good at deploying those reactors. We've only deployed 2 in the last 30 years. And so that's why we decided to build a platform called the Nuclear Company, which is a software-enabled fleet-scale deployment platform focused on using proven technologies that we already have NRC approval for today on approved sites. This gets to your NRC, your NIMBY question. Most of these sites are actually already next to an existing nuclear generating asset, meaning those communities are already very familiar with and in living next to nuclear power generation. Which is the fastest path to be able to deploy. But we did it at a fleet scale, scaling up the way in which we're deploying reactors, so design once and build many.
So do you think you can get to like economies of scale, essentially, right?
I think
which are not there today.
Yeah, exactly. I mean, we literally have decimated our supply chains of labor and materials in terms of the current nuclear power industry here in the U.S., but we're now in a world where the demand is there. We now have to create very scaled supply chains of labor and materials and design once, build many, which, again, we've seen this before, whether it's in France or South Korea. When you take a design once, build many approach, you see significant cost declines after each new deployment of a new nuclear plant. We're focused on doing the exact same thing here in the U.S.
Yeah. I want to ask you about one of your first LPs is Gwen Shotwell, CEO of SpaceX. Mm-hmm. It's really interesting. I was wondering if you could tell us how that came about and what does she bring to the table in this area?
Yeah. I mean, I think Gwen obviously is one of the most notable executives in any industrial company in this country. I think she's probably one of the most fantastic executives in the game today. And she took, obviously, one of the most difficult problems in the world, which is taking over and privatizing space deployment, and has been unbelievably successful the last 20 years in building building SpaceX into the company it is today. And what we're also finding is that almost all of the best talent is falling out of these organizations, and we happen to be based in Los Angeles, and so some of the, LA happens to have some of the greatest density of advanced manufacturing, engineering talent coming out of aerospace and defense. And so we focus very closely on backing the founders that are, saying, hey, maybe I want to stay here on this planet and build the technologies and industrial solutions that are going to help us build a more resilient economy here in the U.S.
That's interesting. So you're based in LA. Mm-hmm. So where do you go to find? I'm just curious. Like I know there's this big in Long Beach. There's just tons of these space companies.
Yeah.
Aerospace. Do you just go hang out there? How do you find these people?
Yeah. Well, we actually just invested in a company called Senra Systems. Incredible business. So, surprise, SpaceX team. So the founder and CEO used to run the wire harnessing program for the rocket business. Mm. What he realized when running the wire harnessing program, which just for context, a wire harness is effectively, the series of wires behind any two electrified points in cars or defense or any other kind of two, electrified devices. Turns out it's a $200 billion a year end market that is completely devoid of technological and kind of digital transformation, where there's an opportunity to build a completely new technology-enabled platform to design, develop, and manufacture wire harnessing. And so we were thrilled to be able to invest in that business, which they have way more demand, and they're just basically modernizing the way we design, develop, and manufacture wire harnesses. Spun out of SpaceX, unbelievable team, cranking in El Segundo.
I want to ask if you could look into the future a bit. See, I know you're doing these scaling technologies that are ready today, but what are you looking at down the road? Is fusion interesting? Geothermal? What's interesting to you?
Yeah. I would say fusion is super intellectually interesting. For where we like to focus, we like to focus on technologies that we can actually commercialize today. We just tend to find that time matters and money. And if you really want to be able to drive returns, you have to be able to invest in technologies where there's a clear path to commercialization and real unit economics that we can actually underwrite to be able to scale on a just dispassionate basis, just purely on their economic merit. And so while fusion is intellectually interesting, it's an area that we don't invest in just based on where we think returns are going to be in the next 10 years for our investment firm. Geothermal is actually now at a place where we're starting to see real commercialization of that technology. I mean, it is can be probably one of the most abundant sources of 24/7 firm carbon-free power is sitting right under our feet. But we just haven't been able to necessarily get to the depths that we've always, that we've needed to get to produce that kind of reliable energy. We're now able to do that in many ways, driven by the advancements we had in fracking. So literally learning from the oil and gas business around how to drill deep to be able to now apply that to the geothermal industry. So yes, I do expect the geothermal business to be a growth category within energy.
It's interesting, and I think we have time for one more quick one, but. And maybe this is a big topic, but in order to do this, you need scientific breakthroughs, right? And we're seeing, essentially they become commercializable eventually, right? Mm-hmm. But you need to feed that pipeline. Mm-hmm. And I think there's a lot of questions now, okay, what are we funding? Is the government funding basic research like it used to? Yeah. Is that a problem? Do you see the sort of the pipeline running dry at some point because of that?
Yeah, I mean, I do think it's a problem. I mean, I think to your exact point, I mean, that is the highest funnel investment that we're making as a country, predominantly coming out of our university systems. And this isn't just the investments in the R&D labs that are creating these technologies and nurturing them to the point where they can then be commercialized. But it's also, interestingly, the endowments of these universities that tend to be some of the greatest sources of capital for the investment platforms that then invest in them. And so we're in this moment right now where we're defunding the research and development that tends to be the very high funnel pipeline for our emerging critical industries. And we're also at a point where we're now making it more difficult for universities to maintain their endowments, which tend to be some of the largest sources of capital for the investment firms that then back these companies and these founders. And so I do think both of those things are headwinds broadly for the continued lead that we have as a country in terms of our innovation economy.
Yeah. Well, sorry to make you end on sort of a sad note there, but I learned a lot. Thank you so much.
Well, I'll make it positive. The positive end would be, I think that this isn't about China. I think this is an American opportunity to rebuild the critical industries that are going to drive us forward. And I do think we all have an amazing opportunity to do it.
Thank you so much.
Yeah, thank
Appreciate
you.
it.
Yeah, thanks so much.